Welcome. You're tuned in to Market Pulse on News Central in partnership with Nairametrics. Here comes that comprehensive breakdown of market activities you have been waiting for, and of course, an analysis of the stories that are driving the markets. I am your host, Joanna Mustafa. Let's begin, of course, with top stories from the global markets. Today is expected and is probably a day of busy earnings day in the U.S. Direction on U.S. futures pointed to a softer opening, while bonds, of course, edged lower as the prospects of less aggressive Federal Reserve interest rate cuts continue to weigh on the markets. The Dow led U.S. stocks futures lower today, slipping 0.5%, while S&P edged 500. The S&P 500, I beg your pardon, edged down 0.3% after the benchmark recorded back-to-back losses for the first time since September. Contracts on tech-heavy Nasdaq 100 slid around 0.3%, and the shares of electronic car maker Tesla, they were down in pre-market trading. It's the only company, technology firm, amongst the top 7 that are expected to see profits decline in its latest quarterly results. We're talking about Tesla here. Coming to 10-year treasuries, that dropped as well, lifting the yield 3 basis points after it topped 4.2% for the first time since July earlier this week. And yields on Japan's 40-year notes reached the highest in 16 years. We know that the rally on stock has lagged. Investors are questioning how quickly the Federal Reserve will cut interest rates over the next year. That, of course, waits to be determined. Next decision is to be made next month. Moving across the pond, and we're talking about the UK, the upcoming UK budget, and as well the US elections. Investors are prompted to shy away from risky assets, and that's why we see gold going up. London's benchmark index extended declines for the 4th straight session today, while industrial metal miners dragged the index lower. Blue chip FTSE 100 declined by 0.2% to 8,264.5 points, while the domestically focused FTSE 250 index also fell by 4% to 0.4% today. That's at about 10 a.m. I beg your pardon. The prospect of another Trump presidency, we know, has been a focus for investors across the globe, and there's a lot more caution as they are waiting for more clarity. Election is next month, November 5th. So we'll see what happens across the global markets and how the markets react in the build up to that. That's your global market wrap up right here on Market Pulse. Up next, we'll be heading to the NGX to see what happened there. All right, we're coming now to the local bourse, and yes, we just escaped the red marginally, right? Aradel did make an attempt to drag the markets down, but Oando did it better, lifting the markets. We saw a marginal 0.05% gain on the NGX today. I believe the market capitalization, we haven't quite crossed the 60 trillion mark from what I see here. We're at 59.9 trillion. So we'll see what happens. And obviously when we'll see what happens ahead. But we were in the green today, thankfully. So that marks 3 days consecutively in the green on the NGX, and hopefully another day in the green, and we'll cross all the ceilings, right, that we are pushing. Oando, a top gainer for today, gaining a strong 10%. It's likely that their audited, the audited accounts that were expected, 2023 audited accounts are expected to be out today, was the promised date. So perhaps that's what's driving, it being a top gainer today. It gained 10%. We're also seeing Unilever and Unicell all up there as top gainers, gaining 10%. All of them. So they're in at first position. McNichols as well is up 9.79%. Regal Alliance Insurance is also up 9.62%. It's been in and out, top gainer today, top loser tomorrow. So a lot of volatility with that stock at the moment, but it's a top gainer today, gaining 9.62%. Omatech finishes that list, gaining 8.06%. Coming to the bottom losers, Aradel in early trade today. We saw it make that attempt to drag the markets down. It's the top loser. It was down at 9.9%. More sell-offs. We know that the first 2 trading days of this week, it has been muted, has been silenced, and now it's back. We're seeing activity on the stock, and we are seeing more sell-offs. A lot of questions around what's happening with this stock, but we'll have that conversation in just a moment on Pulse of the Day. And NFM also down. Consolidated hallmark as well, down 6.12%. LLX and Veritas Capital are all completing the losers list. All in all, we had 31 gainers, right? And we had 16 decliners on the NGX today. And that is the roundup for you. Of course, the Naira held steady today at 1,643 Naira. Up next, we have Chief Research Officer, Invest Data Consulting, Ambrose Omoridion. He joins us for Pulse of the Day. You're still tuned in to Market Pulse. Of course, I am Joanna Mustafa and I have my co-host Frank Fagbo with me now. We are on to Pulse of the Day. And of course, joining us as our guest, providing a breakdown of the goings-ons on the NGX today is Chief Research Officer, Invest Data Consulting, Ambrose Omoridion. Good afternoon. It's great to have you on today.
Thanks for having me.
Always a pleasure. I mean, before we get down to what's happening with the oil and gas stocks, let's look at some other stocks. A number of entrants into the SWOT, stocks worth over $1 trillion of late. Transport Hotel. We also had Oando. Both of them are not new to this category. So would you say that this constant in and out, from stocks worth over $1 trillion is reflective of the larger market volatility within, with stocks of late on the NGX?
Yeah, actually, you are correct. I've said that the volatility in the market is there to create opportunity for investors to make money. When markets remain, a bit on the side trend, it doesn't make meaning to either the investors or the operators of the market. But a volatile market that moves up and down creates opportunity for traders and investors to make money in the market. The volatility in this stock you mentioned, Oando and Transport Hotel, for me, is a good stock that are going around because it shows also the potential they have. And I would say again, look at the number that were released from Transport Hotel. They point out where the company is coming from and where they are going. But I'm looking at the price of almost 106 as of yesterday, and also the earnings they posted. Fine, you say yes, the earnings is low and the dividend payout is very low. But this is what we call a form of defensive stock for some investors because every stock on the exchange has different work category, and the investors have different goal for investing in them. But for one look, the expectation of the price, the earnings, and also the performance from year to date show where they are going, and also what is happening in the oil sector. Put out that as an investor or trader, sector rotation is key in any market, whether in a mature market, in our market here. We want to see a sector that has a positive potential. Go in for the market. What drives that potential? Either government policy or sector reform, and also company also going to another business. For me, Oando and the oil sector remain a place that the investor should play at this moment.
All right, it seems you're saying traders are happy about the perhaps volatility. You say it's an opportunity for them to make money. So people have to stay glued to the news with all these stocks.
That's the beauty of stock market. It must be volatility for you to make money. Yeah.
Indeed, indeed. You pointed out Oando. We did mention that Oando had crossed the 1 trillion mark, and it's being attributed to the rally on oil and gas stocks. And of course, they said today that they were going to release their financial statements, their audited financial statements for 2023. I'm not sure I have seen that yet. I don't know if you have seen that yet. But how do you see investor sentiments rallying with this announcement? And if it hasn't been released today, or if it isn't released this week, how do you see, perhaps, do you have concerns, considering this is not the first time that they have missed a deadline for release of results?
Yeah, actually, I would say that for every investor or market players, traders, to understand that there are peculiarities that come with different companies. Oando movement is not because of either we are seeing impressive earnings or they are paying dividend regularly. It's what we call momentum investing or momentum traders playing Oando. And why are they playing? Because they are seeing potential ahead of Oando because of what the recent acquisition, which what they did during the Konoko Philip, where investors also were disappointed. But the company said they've gathered a lot of experience for Konoko Philip acquisition, which is going to play out in this recent Agip acquisition. Investors are looking for that. That confidence is what they are having now. So I believe that whether Oando releases results today or not, Oando will still go up forward for traders. But for investors, they say that yes, there's no dividend to work on that they're going to hold on to. But for traders, they're not looking at the numbers. The numbers will come. It will be like a momentum that will drive the price immediately. But because of the nature of Oando operation and also the sector they are operating, today I'll tell you that crude oil international market are crossed almost $75. And as far as the big economies like China and US are going to depend on crude oil, despite the innovation of going to batteries to run other car, you can't use battery to run big factories in China or in the US. That means demand for crude oil will remain in the next 10 to 20 years. Yes, after that I can say fine, but for now, since Oando is planning to double his capacity of crude oil production and the prices are looking up, it tells that we're going to see more better number from Oando. Yes, we have seen on the account of Oando for 2023, where is the first company in Nigeria to hit 3 trillion turnover, which is their top line. For me, it's a good one. Despite that, the bottom line is still very small. But when a company is expanding its top line, it says that there's possibility for them to also to grow their bottom line. Whether it is result or not, Oando will still go. For investors to know that Oando is a company that, in terms of corporate governance, they are still trying to come up. They have been poor in corporate governance before now. But if these are merger and they start putting their house together, I would say welcome development board. Don't say because Oando wants to result today or not, you don't want to buy. Buy for that moment to invest that are going to drive Oando. So Oando has not moved from 10 naira to almost 19 naira because of earnings. He moved there because of what momentum investing.
So it's good enough that they have potential to earn more in with results in the future.
Yeah.
That's all right.
Yeah.
Okay.
All right, so it looks like the law of gravity is taking a toll on Aradel. And right now, Aradel is back on the radar after taking a breather for the first 2 trading days of the week. It's picking off its bearish run from its first week on the NGX. What are investor sentiments around this stock at the moment, considering that there are lots of prospects and it has sound fundamentals?
Actually, I tell you that in equity investment, it's not just numbers alone that drive price. Human sentiment, which is the psychology of investor in the market, also drive price. Don't forget that Aradel just emanated or kind of crossed from the over-the-counter market to right. An exchange that is popular. And also during the NSD market, this stock have done tremendous for investors, getting wet for them. I know I bought Aradel for my client as low as 2,000 naira, and I sold that almost at 9,000 at OTC. Now it's coming back to NGS. The company has not changed. Performance and fundamental remain intact. But for those early investors in the stock, they are about to take profit. The profit is part of equity market trading. Because if you don't take profit, you are not making gain. If you are seeing your paper profit going up and taking, that is bound that everybody will take profit. But I will tell you that the major shareholder in Aradel that is taking profit is what we call the private equity fund that is there, but part of British International Investment. I believe that they are the one pulling down, and also those that have gotten their share as free share, those that are bought at a lower price, they have now after the split of the share become more. They tend to take profit. But for those that are buying now, for those that have entered when they came at 8 naira, don't panic. As opposed for them to because there is still potential. These are what we said earlier about the oil setup, and they are there. I believe that the price will rebound nowhere from now. But the pullback, the people watching for those to enter at a good price. There's no need for panicking at all at this point.
All right. So Aradel's share price is down over 24%. Put that in one hand, and are we seeing that the market correction? Are we seeing the market correcting after the prices were driven up by on the NGX? What are your takes around that? Because it looks like investors are afraid of catching a falling knife. What's your take around that? Have we found the bottom?
You said it all. When a knife is falling, you don't try to catch a falling knife until landed. Investors are waiting for a good support level to enter the stock. When you caught a falling knife, you get wounded. For that, let it land first. And also, I see that for me, support price I'm looking at 500, 480. Once they get there to go in the rebound, even though we bought at 800 naira, the stock will still catch up. Why? If the Q3 number that we're expected to come out around the 30th of October or early November come positively and come with 3 dividend, it will engineer another sentiment for the stock. For me, the company is doing well. There's no need of panicking. It's just because market sentiment was seen. That's why profit taking, I said, is part and parcel of what equity trading.
Okay, still on Aradel, about this time last week, private equity fund Africa Capital Alliance, you're saying that they are the largest shareholder in Aradel Holdings, and they sold off 19.8 billion worth of shares. And this is bringing its stakes in Aradel down from 16% to 15.92%. Now, the corporate disclosure on the NGX website has it that it's providing a lot of liquidity for Aradel's listing. But what do you make of this move? We're seeing the largest shareholder selling its stake. What should other investors be doing at this point in time?
When you said for private equity to come to such companies, they are there for what? To make profit.
Very true.
And I'll tell you that they have made profit, they need to cash out some profit. After you are, that's like when you go to farm to hunt, when you kill big fawn, you have to take it back home. They come to Nigeria as a private equity to come and invest. I tell you that earlier that this is a private equity from British international investment, and which also have invested about $50 million in Nigeria as we speak. It started with Aradel when it was the Niger Delta. they move to some other components in healthcare. They move to others in power. Now they're trying to catch up the gain they've made in Aradel. Despite the exchange rate today, they enter Nigeria pretty system when exchange rate was around 300 naira. Even at this point, that exchange rate, they are going up. They have made almost more than more than 40 to 50%. It's a good return for them. They need to cash out, and also they are not running away Nigeria because the fund is mainly made for Africa, Nigeria particularly. About $570 million have been earmarked for what? For this investment in Nigeria. For me, it's just a development. Let us not panic. It's part of the game that when you invest, make profit, to cash out your profit. It says that these people are here to stay in Nigeria. They're just taking part of their gain to go and invest elsewhere.
I mean, we do admire your optimism there, especially around the oil and gas sector. But overall, we are seeing that despite the gains, right, that we are making with the oil share index and market capitalization, trading activity has declined. There's a 9.88% drop in trading value and a 15.63% decrease in the number of deals. So what signals does this send? And I mean, do you see things picking up? What would be the drivers?
No, what you take, like the breadth expansion is very important. From the first end of this week to today, we are seeing a breadth expansion close on positive. That is that the market is still on a bullish sentiment. For me, there's no cause for alarm. Whether it's a slowdown in volume, they will say there's all those oscillations in volume to give you an insight that in any market there'll be profit taking, a position taking. Now we have seen that despite the mixed trade we are seeing, markets have been closing in green for the past 3 days after we've seen a sign on Friday of recovering. For me, it's a good one for the market. Also, don't forget that more earnings expected to be hit the market. That will give market more clear direction. Also, it tells us the state of our economy. When you see earnings in any economy, it tells you how the economy is, apart from your GDP you are seeing. The earnings that come from these companies will tell you how the sector the operating has fared. And for me, I believe that as we see more earnings in the market, it gives us more access to the state of the economy and at the same time where the market is. Knowing that third quarter earnings is very, very important when it comes to what equity investment, because give an insight what will come at the end of the current financial year. For me, there's no cause for alarm. If the market pull back tomorrow, it's part of the market dynamics. There's no point of panicking at all. Only that invest with knowledge. Don't just follow wagon to trade equity.
All right, thank you so much. So much optimism expressed there. It's always a pleasure to have you on, Mr. Ambrose Omoridion.
Thanks for having me.
All right, we're moving now, and of course, to key metrics with Frank. Unfortunately, we don't have much time. We're rounding up, and of course, the African markets, we're seeing that it's just the EGX that's in the red. All other exchanges that we cover across the continent happen to be in the green today. We'll continue to track the pulse of the markets, 4 p.m. West African time, every weekday. This is Market Pulse on News Central in partnership with Nairametrics. I am Joanna Mustafa.
And I'm Frank Fagbo. Do have a productive and a profitable week.